An emerging market sell-off has been exacerbated by more selling in Europe. We turn now to the deal's Laura Board in our London newsroom. She's got more on the situation. Laura?
Morning, John. Yes, it's really ugly down there with indices falling and falling, and the major ones over here now down more than 1% apiece. Some interesting monetary policy news from the UK coming out right now as Governor of the Bank of England, Mark Carney, speaks in Davos. He is effectively throwing out so-called forward guidance, which has, for the past 5 months, linked monetary policy to the unemployment rate, and says that the Bank of England will reassess how it sets rates from February. He also says the British economy's got some way to run before it's appropriate to dispense with what he calls the emergency setting of monetary policy. He says that even when the Bank of England does so, any move upwards in rates will be gradual. The degree of stimulus will remain exceptional for some time, he says. Some interesting corporate news from Germany. Some behind-the-scenes manoeuvring has unexpectedly quickly secured McKesson, the San Francisco healthcare company, more than 75% of Celesio, the drugs distributor and pharmacies operator that it tried and failed to buy just 2 weeks ago. Haniel, the family-run conglomerate, has sold McKesson a 76% stake, meaning that it now has the legal right to treat Celesio as a subsidiary. Elliott's played a role. We're not sure quite what role it was, having frustrated McKesson's earlier bid attempt. It's selling McKesson convertible bonds for an unknown price. And McKesson says it will proceed with a general offer for minority shareholders sometime soon. We don't know what it's going to offer, but Celesio shares today are up well over the 23.5 euros per share that McKesson offered Haniel for the 76% holding. Finally, in Britain, bank stocks are down badly. In Lloyd's case, not helped by a broker downgrade from buy to hold by Investec Bank. Analyst Ian Gordon cites various problems. He says 2013 earnings expectations are a bit frothy. He says the government may start to cut its 30-odd% holding even further from as early as February this year. He also says Lloyds may have to dig deeper to compensate consumers to whom it's missold payment protection insurance. That's been a big hit on in its results for the past few years. Gordon says, however, he's not overly worried about Labour leader Ed Miliband's threat to cap the market share of Britain's leading banks if Labour takes power in the May 2015 general elections. Anyway, that's all from me right now. Back to you, John, and here's hoping that the day will get better, because it's really pretty dire out there right now.
All right, thank you very much, Laura. We'll see you next week. That was Laura Board reporting for the Deal's London newsroom.